Welcome traders to freetradingvideos.com. You're here with Breakout. I'm going to take you through a setup here. This is for educational purposes only. This is not a trade recommendation. The reason for this is a strong company in a weak market. Could this company break down? Sure it could, but I would much prefer to go short a weak stock instead of a strong company. Let's go through the process here. We can see we got our trend lines on, and we can see that we have a symmetrical triangle formed right through this arena. Broke down out of that symmetrical triangle. We have now come up to test what was once a support level has now become a resistance. We can see we got the nice little candle down here today. We can also see right here is we have a huge gap, or what some people refer to as a window. Generally, when a stock has a gap like that, it needs to be filled or the window needs to be closed. That makes this setup appealing. To enter this position off a daily chart, your entry would be going just below the candle's low here to enter your short position with your stop loss just above the high. For what I call first support is an area where I take some profit off the table, generally 30% of the trade. Then what I'd be looking for is another area of support below that. Now we know we've got the support of the gap right down here. So the bottom of the gap, which is right here, is a very strong support resistance. Okay, so is the top of the gap. And you can already see the top of that gap has already proven support here. There's a major reason why I take some profit off the table there to ensure profit. If we go to a weekly chart, let's go to the larger time frame. Through here, right around that 500 price point, $500, a whole number. It's a form of support. And also see you get prior support back here, prior resistance just below that, also prior support right here. So at 500 is another area I'd be looking to take profits. What about for the advanced trader? The advanced trader could be in this trade already. How? Let's go through it. This is the 5-minute chart. You can see this is the open of the market this morning. We gapped down, we came straight down, went straight back up to fill the gap. Okay, test the high of yesterday. Could not break through, we get the pullback. So if we're looking to trade this off the gap strategy, we'd have an entry above the high here. So if the stock continued up on the day, we'd enter that position and we can put our stop loss just underneath the low. We can see we did not break above that high, which means we developed the double top. We've developed a nice strong resistance area here. So right underneath these two candles here is where you put your order to enter. So you could be in this trade at say 553.70. Okay, you can have your stop loss up here at 555.70. Be risking $2 on a $550 stock. It's pretty good. Now you can see this thing just broken down we go. We closed down at 541. So we could have been in at 553.70. Currently trading at 541. You get a decent profit already, not realized in paper. We could also move our stop down above this high here, which means you'd be putting your stop at basically break even. If the stock runs back up tomorrow, so be it. It doesn't matter. That's how you can get into the trade if you're an advanced trader looking to take earlier, more precise entries, lower risk entries. If you're just starting out, do not use an intraday chart. It will only create emotions and losses. Thanks for attending freetradingvideos.com. Breakouts out.